Hello, welcome to this market review edition by Harvest Asset Management. The third quarter of 2025 was marked by a consolidation of easing inflationary pressures, suggesting the fact that the fight against inflation was won. Inflation across the CEMAC countries continues to weakness due to easing in fuel price increases due to reduction in petroleum subsidy. By the end of September 2025, inflation stood itself at 3.9% in Cameroon, 2.8% in Equatorial Guinea, 3.6% in Congo, and a deflation observed in Chad by minus 0.2%. Therefore, the BIA must be cautious during its next Monetary Policy Committee in December. As concerns inflationary forecasts, Cameroon and Congo find itself above the 3% threshold, with the overall CEMAC, Central African Republic, Gabon, Equatorial Guinea, and Chad finding themselves below 3%, fixed by 3% threshold. Given this situation, a more cautious approach to the monetary policy is recommended by the central bank. As concerns economic growth, the non-oil sector is the main driver behind the economic growth of the CEMAC sub-region, providing about 3.2% in the increase in economic growth, and with the oil sector providing a decrease of 1.5%, contributing to the economic growth. This trend will likely continue right up to 2028, with the economic growth of Central African sub-region finding itself to be about 3.8% in 2028. Maintaining this trajectory, the CEMAC sub-region is witnessing an overall positive economic growth portrayed by the BIA, IMF, and the World Bank. Across the countries like Cameroon, Central Republic, Congo, Gabon, and Chad, these notifiers are showing a positive economic growth, unlike Equatorial Guinea that we are going to witness a contraction. In the short term, the outlook is likely to remain subdued, driven by falling grain prices and a reduced cost in production across the CEMAC sub-region. As concerns the financial market of the CEMAC sub-region, we witnessed an overall reduction in market capitalization, mainly powered by the market capitalization of the debt sector, with a decrease of about 6.43% in the market capitalization of the debt sector, mainly due to the fact that we witnessed an amortization of the sovereign bonds of Gabon. As concerns the equity sector of this market, we are witnessing an increase in market capitalization, mainly powered by an increase in the shares of SAMC, Socapam, Safacam, Bangre, and SAG, unlike a reduction in the value of the shares of La Regional by minus 1.18%. Equally, we are seeing the IPO of BJV Holding into this equity sector of this market, with a raise of 1.25 billion francs CFA, and with the subscriptions right up to the end of December in 2025. The entry of this IPO of BJV Holding is going to project the market capitalization of the equity sector right up to 193 billion francs CFA. And we see this IPO to be an interesting subscription for our subscribers, because the dividends distributed by BJV for the past years have been increasing. And equally, we envisage, according to the official document sent by the issuer, that the dividends across the years are going to be continuously increasing, showing the strong performance by this banking sector in the CEMAC sub-region. As concerns the debt ratio of this CEMAC sub-region, the market debt ratio to this stands itself as 12.3% as of the end of October 2025, with a market debt standing itself at 9.3 trillion francs CFA. Concerning the cost of resources in this sub-region, the case of Cameroon is witnessing a reversal in its yield curve as projected for January 2026. Unlike the yield curve officiated at during October 2025, the yield curve of Cameroon finds itself slightly above that of January 2025, expecting trend showcasing the fact that the cost of raising resources for Cameroon is slightly increasing in the short run and in the long term, unlike a reversal for the upcoming January yield curve. For the case of Gabon, we witness an increase in the yield curve in the long run, unlike long run between the October 2025 and the January 2025 yield curves. Unlike the short term, that the yield curve of January is slightly above that of October 2025. But as concerned a projection of January 2026, we expect the cost of raising resources for the short term to be slightly above that of October, unlike a normal situation that's going to be slightly reduced as from the long term. For the case of Congo, we witness an increase in our overall yield curve comparing the yield curves of January and October 2025. But we are going to witness a reversal here in 2026 for the yield curve on the short term and equally in the long run. Some key takeaway points. Concerning the macroeconomic context, there is an expected inflation to be below 3.6% by December. We expect the resilience of the economic sector of the CEMAC sub-region, mainly powered by the non-oil sector. We expect a slight increase in the price of Brent, situating itself at $65 per barrel by the end of fourth quarter of 2025. Concerning the capital market of CEMAC, we expect a decline in the market capitalization driven by the non-oil sector. We have had a strong recovery in the equity sector of the market, mainly powered by the shares of Safacam and Socapam. We expect a decrease by 50 basis points in the TIAO during the Monetary Policy Committee of December 2025. For optimal portfolio allocation, we recommend our investors to be more cautious and go for low-risk government bonds. We equally expect our investors to be more cautious during the upcoming elections by the Central African Republic in their allocations. By so doing, we recommend them to allocate 80% of their investments in bonds and 20% in equities. With this, we thank you for your kind attention and we hope to see you in January for another edition of Market Review by Harvest Asset Management.